Welcome to the Land to Lots podcast, powered by Launch Development Finance Advisors. And now your host, Carter Froelich.
Hello, everybody. It's Carter Froelich, and welcome to the Land to Lots podcast. And today I'm very fired up because I get to talk with probably the most entrepreneurial and opportunistic developer I know. And both he and his team have just been knocking it out of the park lately. But today I have the distinct pleasure of welcoming Mike Moser, the CEO of Starwood Land, to the podcast. Mike, welcome. Great to have you on the podcast today.
Thanks, Carter, and glad to be a part of it.
And before we get going, and you've been you and your team have been extremely busy over the last couple of weeks. We're going to get back and talk about that. But for those of you that may not know Mike, Mike is the CEO of Starwood Land. As of a couple of weeks ago, they had 24 master plan communities around the country. Now they've just acquired 11 more, so they're at least up to 35, and there may be others on there, Mike, that I'm not aware of, and we're going to talk about the Hines acquisition here shortly. But before we get started, maybe you could tell the listeners a little bit about yourself and the path that you took to Starwood Land.
Well, again, appreciate the opportunity to be a part of the podcast, and been very, very lucky in the industry. And as you mentioned, the team has been busy, and that's the operative part of this whole business. Is a good, solid team is critical. So, been very blessed in that part. I'll drop back 13 years at Taylor Woodrow, as you mentioned. It's now known as Taylor Morrison. I was there when it was really a master plan developer, and that was. I was afforded some incredible opportunities there. I was actually a golf pro and still remain a PGA golf pro. But I was a golf pro and knew that I was unhappy doing that. They were kind enough to teach me the real estate business. And I started as an acquisition analyst, at the same time, kind of overseeing golf operations and golf construction. But over that 13-year window, really was taught a tremendous amount about the master plan development and the concepts affiliated with strategic planning, various builder in trying to create win-wins for the builders and the developers. That was really the most impactful part of that 13 years at Taylor Woodrow. When I left there, I was in charge of the land development division and the high-rise tower division, where we built condos on the beach. The great financial crisis, we were tipped off very early as '05 in the high-rise condo business that, the true storm was coming. And so that's when we pivoted and started to look for equity to try to go on the distress side for the great financial crisis. And so the 13 years at Taylor Woodrow were great foundation in kind of learning the business and learning the real estate world. Without that, I certainly would have never been able to create, the Starwood Land package, which really was just a couple of guys leaving Taylor Woodrow and starting this platform.
Yeah.
And now it's 25 plus employees and soon to be more.
Yeah, no, that's great. And you talked about when you were at Taylor Woodrow, the relationship of developing a win-win deal structure, with the builders. Could you elaborate on that a little bit more and what that meant at the time and what you're carrying forward? I know it can probably mean a lot of different things for a lot of different transactions, but is there any guidance you could share with our listeners as to what that means in your mind?
Yeah, I think what we tried to do is, not oversaturate any single community and try to create, lanes that various builders could play in. If you had a smaller lot product line, you had maybe one or two builders on that. And then if you had, some custom lots, you might have had three or four custom builders, but you're selling those lots on a slower pace, a slower cadence, but a much higher, home price. So it was really the structuring of the builders in the capital stack such that the builders are not cannibalizing each other, and having their sales success at the same time allowing the developer, us, to kind of move through the project in an acceptable pace to generate the returns we were looking for. So that was really the biggest lesson was not too many builders. We always try to have fewer builders, more sales, and that creates the next set of lots is a
Yeah.
no-brainer for that builder. If there, you know, too many builders in one particular community, you can create an incestuous experience
Yeah.
that's no one's going to enjoy.
Yeah. And as long as everybody's kind of delivering and playing nice in the sandbox, they're teed up for the next phase and they just roll from phase to phase to phase and in their lanes. Is that kind of the game plan?
That really was
Yeah.
the really what that the most crucial lesson that we kind of learned over the years with the Taylor Woodrow experience. And we
Yeah.
were selling lots to our own builder as well. So
Yeah.
we had to convince other builders that, it was truly maybe it wasn't 100% arm's length transaction, but it was really a fair lot price for our builder as
Yep.
well as them. And
Yep.
so that was always a challenge. And we were successful in doing so. And I think the builders that were in there and it understood that, hey, yeah, Taylor Woodrow was the master developer, but also a builder, but they're
Yep.
still on a fair footing,
Yep.
really.
Yep. Great. Great. And so Starwood is in, and I'm going to refer to Starwood as Starwood Land, but you're in a unique position in with your relationship with Starwood Capital. Could you discuss a little bit for our listeners that may not be familiar with how Starwood Land and Starwood Capital are aligned and just share that information so everybody has background because that's going to become more important as we go through the podcast.
It is. It's a very interesting relationship. Starwood Land is a doing business as name. It's a
Mhm.
marketing name more than it is anything. Starwood Capital, I'm actually the longest tenured joint venture partner with Starwood Capital. So we've
Okay.
been 17 consecutive years. We've worked for various opportunity funds going back to as early as Fund 7. This most recent transaction we did is with Fund 13. And as they've grown, we've kind of grown. The deal sizes have grown. That would be a benefit that kind
Yeah.
of differentiates us. But we're truly a joint venture relationship with them that has just been ongoing for
Mhm.
17 consecutive years. And the Starwood Capital side, they typically are a very good resource in helping us source some of the bigger
Yeah.
off-market transactions too.
Yeah. Oh, that's great. What a great relationship. So I'm going to go back to 2005. You're at Taylor Woodrow. You're seeing the meltdown in the high rise. You jump from Taylor Woodrow. You join the Starwood team, if I can just say that. So it's just a couple of you, and you're starting off. So what was your vision when you originally started with Starwood, Mike, as to what this opportunity could be, or where you wanted to take this, the business?
Well, we really thought what we kind of in 2005, we had contemplated that there would be a 30% home price decline.
Mhm.
And we did, among other things, we did an extensive research document that we basically, kind of rolled out what will happen when that happens. And
Mhm.
so we were predicting, many builders would be laid off. We thought that 50% of the publicly traded home builder staff would be let go. That number got closer to 80%, which
Wow.
is crazy. So if you're me, you're sitting there at Taylor Woodrow, you're going to be one of those riffs, you know that. So it was not hard decision to move because you're going to be laid off. We kind of knew that. Um, and so we were contemplating, maybe buying some service businesses. We thought,
Yeah.
law firms and title companies and, architects and engineering. It's going to be a struggle for those services people.
Yeah.
That was kind of ancillary, but more importantly, we thought, many of the markets that had a tremendous amount of, lots on the ground, like a Phoenix or like a Atlanta or a Dallas or a Houston,
Mhm.
to some extent, some of the Florida markets as well. We were in Florida,
Yeah.
we live here, but we thought that there would be some real distress and kind of had some insight into how the financing of those the
Yeah.
developments were, and there were a lot of small banks involved and a lot of
Yeah.
institutions that probably couldn't sit and wait and hold those assets. So our initial thoughts were, let's go buy distressed real estate. Um, we started in earnest in '07. The best deals were '10 and '11.
Yeah.
So it took a lot longer than we had anticipated. Um, And then obviously now it's a full retail market, and
Mhm.
land is a difficult thing to underwrite, and the builders are very, very well financed, and I
Mhm.
think their balance sheets are stronger than
Yeah.
ever. And so we've morphed into, being more opportunistic and using our size as and we'll talk about the Heinz deal later, but
Yeah.
our size is what helped us on that.
Yeah, no, absolutely. And going back, I just remember, we had a lot of calls. Everybody was looking for districts that were, going to be in distress, primarily the CDDs in Florida. And, can we buy the bonds cheap and foreclose on the land? And also we went back and I found $133 million for 33 public home builder divisions that because everybody was laid off, they just forgot about to go get the reimbursements. So we were collecting reimbursements for these divisions that everybody had lost track of. It was a crazy time. Well, I'm glad you brought up Heinz because a couple of weeks ago, you guys closed, according to the press, about an $800 million acquisition of 11 master plan communities in Houston, Dallas, and Austin of Heinz, about 16,000 lots. And, to that end, how did the notion of acquiring the Heinz assets come about?
Great question. Well, I got to back up a little bit too, Carter.
Yeah, yeah,
Uh, we also acquired a little over 3 years ago, the Land Tejas assets.
correct.
So
Yeah.
that was a comparable size deal, 16,000 lots, $425 million purchase price. And so some of the consultants that were working on that portfolio, we actually closed that deal, the Land Tejas thing, in less than 3 months.
And I'm gonna have to ask you how the hell you did that too at some point. But I know we're gonna because you did about the same thing with your team here, so I don't want to get ahead of myself.
Yeah.
But I'm gonna write that one down because I want to
We'll
ask.
cir we'll circle back to that, but it was I would say the foundation and the base that allowed us to do the
Yeah,
Heinz. So
yeah.
having some experience in doing that, we got that one done very quickly. We felt strong about the portfolio, and it has been even better than what we had underwritten. And so we've been very, very happy with that. We actually are able to put a lot of capital in the ground and spec some lots, which many developers don't do. We will put lots on the ground without a contract and try to get full retail price for them.
Mhm.
And so we were successful in that portfolio. And so one of those consultants was actually meeting with the Heinz folks, and the Heinz folks had mentioned that they would be considering selling 10 or 11 projects and would ideally like to do it at one time.
Uh-huh.
That particular consultant said, well, that's a big, big deal. What are you talking about? Selling them all at one time? There's only probably a handful of people that would actually do
Yeah.
that, but we actually know a group that would do it and do it very quickly, and we think would treat you really fair and try to create a win-win.
Hmm.
Um, and they said, well, who's that? And he said, well, the Starwood folks. And so we literally flew out the next day and met with them and
Hmm.
kind of laid out the process. And it was a very collaborative effort.
Yeah.
You can't do a big deal that way without a collaborative seller and a collaborative buyer.
Yep.
You have to work, conjunctively together,
Yep.
and it's a little bit of a risk taking on both people's part because
Hmm.
they have to trust that we're going to perform, and then we have to trust that they're going to provide data and information on a timely basis that we can evaluate and underwrite these assets, and kind of moving all of these things concurrently. We spent a lot of money in 90 days basically on a handshake.
Yeah.
So there's just not that many people that can pull that off, but
Yeah.
this particular consultant that turned us onto that deal was a big part of the due diligence. We actually have a list of parties involved in the acquisition, and it's 53 people that were
Wow.
involved
Yeah.
with the deal, and that's various attorneys, that's banks, that's sellers counsel, that's buyers counsel, our staff of 12, 14 people that were working
Mhm.
on it. Consultants in various capacities. So it's going to be a fairly large closing dinner.
Yeah.
That's coming in a couple of weeks. But
Gonna need a
and
convention center, it sounds like. Yeah.
yeah, so it takes a team,
Yeah.
and we've got a couple of senior folks on our team that can kind of uh, I say choreograph that whole squad. One particular guy comes out of retirement for me on the big deals, and he was one of my mentors, a guy named Bob Glantz that was um, instrumental in the Land Tejas thing, and now with the Heinz thing. He's really hyper organized, and hyper is a good term for him because his to-do
In a
list
good
gets
way. In a
done,
good way. Yeah.
but he keeps us all in our lane, like
Yeah.
my job is specific. I know what I need to get done.
Mhm.
John Bryan, Larry Colditz, everyone on our team kind of
Yep.
knows what they got to get done in that quick 90-day window or 120-day window, whatever it is. The Heinz transaction was about 100 days. And
Yeah.
so
Well, and the other thing, Mike, it really speaks a lot to who the Heinz people are and who, who the Starwood people are, that you can enter into a transaction on a handshake, knowing you're going to get to the end unless something, it really pops out of the woodwork that you hadn't expected. But I think that says a lot to both organizations and each individual's teams, that you're able to do that.
they have some great assets, and we're happy to,
Yeah.
be taking them on to the next stage and the next level. Some were in the early stages, and so, we'll add a lot more um, of our touches, but a lot of the stuff, it's such a great foundation they already had, and earthwork happening, and lots being developed, and so,
Yeah.
um, yeah, they were great to work with, and but none of that happens without the Starwood cap,
Yep.
guys as well. Uh, we had 4 or 5 people at the capital level that were a big part of that as well. And so, um, they worked many overnights in a row to kind of get that done.
Right.
And their commitment to spend that kind of money that quickly, it requires a ton of 16, 17-hour days.
Yeah, yeah. So the consultant comes to you and says, "Hey, there may be a deal. Heinz is looking potentially to offload a number of projects." Was there one thought that really got your interest besides having another 16,000 lots in the top markets in the United States, being Texas in the but what was the opportunity that you saw them that really got you excited or interested in this transaction?
I think the fact that, Heinz is a great developer, and the fact that every one of these projects had earthwork already started and or,
Yeah.
were well into the development of these. You're
Mhm.
not buying a raw piece of dirt that is, going to be 2 years before you get your first lot sale. We're
Yeah.
closing lots today. So we literally were closing lots 3 days after the closing. So, they have a tremendous amount of lots under contract, but also a lot of development work that was happening. So you're kind of catching, when you do those transactions, you're catching a running train,
Yeah.
which is
Good.
hard.
Yeah.
But
Yeah.
once you catch it and you kind of convert the accounting and the finance and all the other, strategy stuff to it. Um, the good news is if you don't get run over, by the train, you caught a running train and you're rolling
Yeah.
quickly. And so far we feel like we've caught it, and we feel like we're not getting run over. So
Yeah.
we, kind of feel good about it. And like I said, we are closing lots as we speak. And as you're aware, there's, some bond
Yep.
issues,
Yep.
other things like that are critical that are happening.
Yep.
So it's completely different than buying a big piece of raw dirt that,
Yeah.
you got to bring in water and utilities and infrastructure and blah, blah, blah. Most of that had happened.
And,
Vast
and
majority of that had happened.
And that's a really good segue. So you've got this train, you got 11 projects, 16,000 lots. They're moving down the track. You've got Heinz personnel working on this. You have the Starwood personnel. How do those two teams come together? How do they mesh and logistically in terms of keeping the train and shoveling the coal, into the steam engine to keep the train heading down the tracks?
Yeah, like I say, you have to be collaborative,
Yeah.
otherwise
Yeah.
it just won't work. So you can't just, cut it off and say, okay, Heinz,
Yeah.
is not involved. So we have an ongoing management relationship with them that's going to be accretive to both parties. And so won't go into great detail
Yeah.
about that,
Yeah.
but their management team is uh, wildly adept at what they do, and so we're working collaboratively with them, and
Okay. Yeah.
uh,
Good.
so
Okay.
that's the ongoing management. It's moving quickly, and so our
Yeah.
team is working with them.
That's great. And one last thing, when you were in the midst of the transaction, what was the biggest issue that may have come up that it was a surprise, that you hadn't anticipated, or the biggest challenge in getting this transaction to the finish line?
I don't think there were any real big surprises,
Mhm.
positive or negative, to be very candid. We had a list of issues that we went through, um, but I would call all of them fairly minor. And
Okay.
so,
Yeah.
we felt the pluses and minuses kind of weighed each other out, and so that was really, there was no monster issue to speak of that I think
Great.
that was
Yeah.
problematic. But again, if you had kind of a seller that wasn't motivated or wasn't working collaboratively,
Yeah.
the fact that we got all that work done, I could go into fantastic detail. You've
Yeah.
got all these lot builder contracts and contracts with vendors and other JV partners and things like that. All that's got to be assigned and done.
Yeah.
That's a Herculean effort, and so that was Lan Tejas as well. Same thing.
Yeah.
Uh, it just it takes a village, and so
Yeah.
that village kind of came together, and we're proud of the team that in their side and our side that
Yeah.
made all that happen. So
No,
uh,
we've been fortunate to work with you and your team, and I got to tell you, it's amazing, and you got a great team. Uh, the last question on the Heinz transaction and also Lan Tejas, I guess, because that provided a lot of base and learning experience. But how does the Heinz acquisition align with Starwood's longer vision as it relates to continuing in the MPC business?
well, as you said, we certainly love the state of Texas. We're
Mhm.
long Texas, even longer now.
Yeah.
So we think the long-term future of Texas in migration, job growth, demographics will continue to be positive. I think it's a generally speaking, a pro-growth state that
Yeah.
will embrace, a lot of these new MPCs. And let's face it, Texas is the home of master plan communities.
Yeah.
There's no state like it anywhere in the country, in our opinion. Um, you look at the work that some of these big developers are doing.
Yeah.
They're impressive master plans in Texas, more so than any other state. I say add them all together,
Yeah.
and the EPCs in Texas outshine the rest of the states combined, in my
Yeah.
opinion. So
Well,
we
yeah.
it's a unique structure. Obviously, there's a lot of land availability, but getting it entitled and drainage plans and approved, but also with the vision and the capital.
Yeah.
These capital intensive big projects, but you know, there's 10 or 12 big developers in the state of Florida or Texas. I don't think there's that many in the rest of the country. I
Yeah.
mean, you add them
Yeah.
all up, you know what I mean? There's a handful in Florida left. That's really about
Yeah.
it. But there's some really cool master plans in Texas, and we enjoy touring and visiting them and
Yeah.
you know borrowing an idea here or there. We're
Yeah,
not we're
and
not
I
afraid
want
of
to geek
area.
out on that a little bit, but first I got to brag on you a little bit.
Yeah.
So Sunterra, top selling master plan in Texas for last year, as I recall, and so congrats on that. Uh, and I got to have a little self promotion here, so I'm gonna tell everybody when I called you and Larry about two and a half, well, in end of 2023 and said, "Hey, Mike, Larry, I think I can forward fund your mud reimbursements for your Land Tejas projects." What was your thought?
Well, the cab bond thing was a whole new thing, and you were the pioneer, and so kudos
Yeah.
to you and your team for that. We are very appreciative. We've now done 400 million of that since,
Yep.
so we are I think that's a big game changer for the
Yep.
state of Texas, and it's accretive and complementary to the mud world. The mud,
Yeah.
without MUDs, master plan communities just can't happen.
Yeah.
That's all there is to it. And so, MUDs and or one of the other bonding capacities, you
Yep.
just can't do these big deals without that. And
Yeah.
so, the cab adds another, arrow in the quiver, if you will, and that's a big arrow. And so
Yeah.
when you first pitched that to us, I read it and I said to Larry, I said, I think this is a new mousetrap. You need to figure out, he's way smarter than I, like I mentioned earlier. It takes a village, and our team
Yeah.
um, is we're blessed to have some really smart people, and Larry's one of them. I said,
Yeah.
Larry and John, don't do anything for the next 90 days until you find out if this Carter is full of it. He's either A, full of crap, or B,
Yeah.
this is going to be value add. One of those two is going to happen.
Yeah. And
And
I
so
remember being out in Orlando and having lunch with Stuart and John Bryan, and they were looking at me just basically saying, "Don't screw this thing up." And I said, "Thanks for trusting me. I don't think I'm going to screw it up." So
I
we were able to get it. And I just want to say thanks to everybody at Starwood for picking up the phone and listening to it. So thanks for that. And that's all but I agree. The cities, the counties, the jurisdictions, whether you're in Florida, Tennessee, California, everybody's out of the infrastructure business from a municipal standpoint. And they're relying on the private sector to build all this, build these communities. And all we want to do is come up with efficient ways to finance that infrastructure, be it a CDD, a PID, MUD, what have you, all the different acronyms. So, uh, let me ask you a question because even though I'm a CPA, I'm a really a frustrated urban planner, Mike. And so when you're looking at creating place, when you're driving around, be it Florida, be it Colorado, where you've got property, Texas, and you're looking at innovative master plan communities and ideas, what are some of the more intriguing things that you've seen, or if you can even talk about it, designs that may be on the boards right now, or any changes in the desires of the home buying community, builders, etc., as it relates to the MPC world. Any insights on that at all?
Well, I think it's interesting as you see in Texas, the bar continues to get raised from an amenity standpoint and,
Yeah.
country features, landscape. So, um, there's a lot of sophisticated guys and girls out there doing great jobs. So you've always got to be on your game. These amenities are morphing into, big dollars. So,
Yeah.
Sunterra, you mentioned, we'll probably have about 45 million bucks in those two amenities, the
Wow.
north and south amenities. So, um, I know several other communities that are doing similar type stuff. So,
Yeah.
um, it's an interesting see how far that goes and see
Yeah.
what next new are. Some of these agricultural neighborhood themes. We're studying, looking at that. I think it's a wonderful theme. I think more and more folks are looking to integrate with the outdoors and with more uh, a bit of a lifestyle change, if you
Yeah.
will.
Yeah.
We are. We're big into the lifestyle thing. And so many of our communities will have lifestyle centers. We have welcome centers. We have lifestyle coordinators at some of our stuff. We third party that service out to On Place with Monica Onstead and her team On Place.
Mhm.
They're just great at creating that and doing that. But
Yeah.
I think that's going to become more and more of the norm, not the exception. As these bigger communities, people looking to get connectivity, um, and with social media and with some of the
Mhm.
electronic ways to connect folks,
Yeah.
it's pretty easy to get your message out there, what activities you have. Um, but executing those activities is the hard part. And so,
Yeah.
um, like I say, like the agricultural neighborhoods and some of the, other themes with whether it's pickleball or
Yeah.
some of the other stuff that's happening, getting that neighborhood to come together is a critical component for these MPCs.
Yep.
So we spend a fair amount of money on that, the lifestyle coordination, if you will.
Yeah. And I've really seen, and I know Land Tejas and Starwood are big on the Crystal Lagoons, and it seems that there's quite a few of those right now in Texas. But that's has that been a great way to activate the community and bring in traffic? Kind of a dumb question, because I know if my kids, or if they were younger and I brought them there, I wouldn't be leaving without a house. So
Yeah, I think as you mentioned, Sunterra's uh, sales are pretty incredible. Last
yeah.
year sold a little over 1,350 homes. And so, the lagoon's not built yet. It's actually got water going in it today, probably
Uh-huh.
going to in the next 30 to 45 days. But I think the promise of that lagoon is a
Yeah.
big part of that success. And so um, I think they are value add. You got to be very careful though. They can be very expensive. And
Yeah, very. Yeah.
management operations, cleanliness is critical for us. And so um, we're pretty cautiously optimistic about the future with those, but
Mm.
they certainly are one of the big attractants in these. As I said, the amenitization of these big master plans by us and others is,
Yeah,
there'll be a continued part of that, I'm sure.
great. Mike, we're getting towards the end, and I just got a few additional questions for you. You've been in this business a long time. You've done some of the biggest deals out there. You've seen a lot of things that work, a lot of things that don't work. If you were to go back in your files, what's been the most the impactful learning experience you've had, or something that maybe your mentor has told you, lesson learned, that you'd like to share with our audience?
Well, that's a good one. I think probably my tenure at Taylor Morrison was an interesting business model. We had a fairly decentralized government, if you will, where each division and region was, allocated capital and money and had its strategic goals of, number of closings or lot sales, whatever, it was. But you had some autonomy to create the financial results that were required. So
Yeah,
you were given enough rope to kind of hang yourself or be successful.
yeah,
And so with that, you get burdened with the responsibility to provide, the execution in the communities and build the lifestyle and build the amenities and that, but also create the financial returns.
yep,
So uh, yeah, I was very blessed to be a part of that and have, that responsibility, but the authority to execute at the same time. So our company is that today. We kind
yep,
of are large part of our employees co-invest in these deals. And they also take financial responsibility at each level of these projects. And so
yeah,
I think that kind of extend the authority, but also the responsibility
yeah,
is a management style that we
yeah,
embrace. And so if you were interviewing, a John or a Brian Stidham in Houston,
yeah,
they're owners. Those guys are owners and they act
yeah,
like
yeah.
that's
It,
critical. That's critical to us.
it,
So
it exactly, and that's great, because I mean you're giving them the authority, the responsibility, but also the opportunity to be an owner and profit as a result of doing good work and delivering. And so that's awesome. I mean,
I
that's a
think,
great takeaway.
you know, one of my mentors said to me, don't expect anything you're not willing to inspect.
Yep.
And so I kind of look at my job as that, as I just kind of try to inspect a few things to make sure we're all beating on the same drum and
Yep.
and kind of achieving the goals, both financial and execution, lot development, and so forth. But the truth is, with the team that we have today,
Yep.
it's not really that difficult of a job. It's actually pretty easy because they are, like I say, they're vested, they're owners, they take the authority and the responsibility very, very seriously. And that's a blessing.
That's awesome. And I want to tell anybody, if you're looking for lots in Texas, Mike's your guy. I'll make sure that I leave your phone number and your email address if that's okay, Mike, in the show notes.
Well, appreciate that. We definitely have some land in Texas.
And other places. Yeah,
Yeah.
don't want to preclude anybody from reaching out to buy land in the other states where Starwood is active. And before we go, is there any question I should have asked you that I didn't that you'd like to share with the audience?
Well, I can't think of anything specifically, but
Okay.
as I shared with you earlier, we're very, very blessed to have a good team, and it kind of happened by accident. When you think about the acquisitions that we've done over the years, we picked up, you know, some personnel along the way
Yeah.
that have become instrumental in our platform. John Bryan is our COO. We got him when we bought the McCarr Homes portfolio in Tampa in 2010. So
Yeah.
been very, very lucky to acquire some good people with the good assets.
Yep.
We have accounting that's head up by Jennifer Wilson. We kind of inherited her from Lennar after Larry had joined, who had some Lennar experience. So, been very blessed to keep a good, solid team around and keeping them motivated. So hopefully they all stick and stay and finish this stuff with us, and we find some other stuff.
Yeah. Well, you guys are knocking it out of the park. Congrats to you and your team. And for all of our listeners, if you've enjoyed this podcast and would like to share it with your team, we encourage that. And please subscribe to the Land of Lots podcast wherever you get your podcast. So thank you, everybody, and have a great day.
You have been listening to the Land to Lots podcast with Carter Froelich. Follow us wherever you find your podcast to never miss a new episode.